We are in Paris, and today I'm gathered with Nic from Blockchain.com. Nic, thank you so much for joining us today.
Thanks for having me.
I would love to hear your story, how you got into crypto, because obviously Blockchain.com has been around for so long. You were incredibly early, so I'd love to hear your story.
Yeah, thanks. I'll go back a little bit further. I basically studied politics, economics, and business in school, and then became a teacher in my first career, and then went on to become a startup founder of a company, basically out of the sort of Web 2 era. And I did that for a long time. And in basically 2011, I learned about the first cryptocurrency, Bitcoin, from a close friend of mine. And at the time, I thought it was a bit fantastical, but I was really interested in the sound money concepts of it. And really, it presented itself at a perfect moment in my career, and the opportunity was just sort of exceptional. But what I was convinced of was that if it was possible for a computer system to basically create counterfeit-resistant digital goods, those would be highly useful for the internet. And it combined my fascination with technology, with money, and politics all in one place. And so we actually registered the domain originally for Blockchain.com was the predecessor project called Blockchain.info. So for really old crypto OGs out there, they'll remember that. And Blockchain.info was the world's first block explorer. And in 2011, no one really cared about this stuff. There were a few hundred people on internet forums, mainly bitcointalk.org, that were conversing and having a dialogue about what cryptocurrency and what Bitcoin could potentially become and what it could do. But it was going to need to get easier to use. It was going to have more adoption. And in the early days, this stuff was all very difficult to use and very kind of intimidating. And so we were constantly listening to the bitcointalk.org forums for recommendations on different things we could build for the Explorer. And that's how we got into it. Basically a bunch of nerds that liked the internet and wanted to understand what was happening on the Bitcoin network at first. And we built the Block Explorer to do that. And so a lot of the sort of information architecture for all the other Block Explorers was really sort of mimicked from our original work on the Block Explorer.
Mm-hmm. How was it like back then?
Everyone thought what we were doing was crazy. I would say that it was not a popular career choice. If anything, people looked at it a bit odd. But we were just really in it out of the interest in statistics, the math, and then obviously I think the promise of building an alternative financial system was really alluring. I graduated right out of the great financial crisis. We were watching unprecedented, money intervention in the supply of money itself through quantitative easing after the great financial crisis. And so it became really interesting to me as an intellectual exercise, like what if we can invent and build a better financial system for everybody, one that puts everybody on an even playing field, an open, accessible financial network for the internet, so that regardless of the circumstances of your birth, you could do basic things like send, receive, secure, trade, and exchange digital forms of wealth. And so this idea was really the right big idea. And when you have the right big idea and the motivation, then you can pursue that through a deep reservoir of well of motivation to pursue it for a lifetime of work. And so to me, there's sort of two really important things I care about in the world. And one is reinventing people's relationship with money. And the other is supporting more entrepreneurs to basically build the goods and services that help clothe and feed us and make markets function. And we need to have a society that's more representative of the composition that it exists in. And so we need a better financial system, and we need a lot more entrepreneurs building things.
Mm-hmm. It was an incredible, ambitious step to take back then in terms of one vision and then, actually taking step by step, getting closer to that much bigger idea. So at any point, did you think that you were being too ambitious? It was too, maybe not as possible as you thought? What was the first big blocker that you found? Maybe mental, maybe actual.
Yeah, I mean, all companies go through a challenging period of time where they're forging an idea and trying to find really product market fit. And we were lucky being quite early and established ourselves as a reliable source of information about the Bitcoin blockchain at blockchain.info. And so we use that as sort of our, I would say, our North Star to build other things. And so we knew that if crypto was going to become more widely adopted, it had to get easier to use. And so the next thing we ended up building was iterative, which was to build a wallet. And so we built the world's sort of first non-custodial wallet that was easy to use, that anyone could sign up for anywhere in the world. And then we followed that up by building apps for iOS and Android. And there were lots of sort of turbulent times at the beginning, from getting these things approved by the app stores. That was not a given back in 2012, 2013. And then you had the advent of real changes in the crypto space, which was divergences in views around how these technologies should evolve. You had all kinds of projects that kind of came out of nowhere. You had obviously sort of a major development with the launch of Ethereum, but there were always all kinds of replica projects that people don't talk about anymore that looked a little bit like early stage ICOs. I don't know how many different crypto projects were called New Coin, but many of them, and most of them don't exist anymore today. But I point this out just to share that, like, in our space, there's been pretty significant volatility over the last decade. And people that spend their whole lives in a financial career, for example, at a traditional financial services firm, they might have 2 or 3 moments in their whole careers that were just really intense, really difficult for them, whether it was the dot-com burst or the sovereign debt crisis or the great financial crisis or whatever. In crypto, we've had loads of those things of our own making, and because of challenges in our market, whether it was Mt. Gox or Bitcoinica or the BitMEX exchanges, or insert any of the challenging market dynamics and projects that have come and gone. So building a company that can survive through the ebbs and flows, the bull and bear markets, has been something I'm really proud of. But that's really a testament to our team, and not so much anything that our leadership's done.
Yeah, I guess that would have prepared you for when FTX situation hit. How did you handle that? Did that affect your business significantly?
Yeah, so we'll have a little bit of a therapy session now. 2021, you have an amazing year in crypto where basically there's sort of this 4-year trend. It doesn't repeat exactly like this, but it sort of rhymes like this, where you have a really good year, then you've got sort of a major correction, you have a new sort of I would say base set in the sort of market activity, volumes, trading, and then a year where there's consolidation and more people start holding and stacking reserves. And you can see this in the on-chain data. And so 2021 was one of the really good years. It gets followed by a significant series of episodes that make 2022 one of the most painful years in the history of crypto. And it's sort of 2 things that are really thematic about that. You've got basically a downturn in tech equities. So people don't maybe remember this, but just a couple of years ago, PayPal, Facebook, Amazon, all the big tech companies were actually having a terrible year, and their stock prices were severely depressed. In that market, crypto starts to see a pretty significant drawdown in trading volumes. And then you have the collapse of Terra Luna, which was an algorithmic stablecoin. You had the 3 Arrow Capital failure. That wiped out probably a dozen major crypto infrastructure service firms. You had Celsius go down, Voyager, many others. And then at the end of all of that, you have the failure and the great fraud of SBF and FTX. And so, the industry took a huge, I would say, reputational hit that year. And, out of that, it fell back on the shoulders of all of the people that have been working in this industry to really, think deeply about how do you build these tools in a way that builds consumer trust. And we have to go back to some of the foundational principles of crypto, which are decentralization, open source, using the transparency of the blockchain itself to really demonstrate the power of these tools and to hold the systems accountable to show what they're supposed to do, and do that in a way that engineers trust in their utility, in a way that, excuse me, I'm going to restate this. I'm going to edit this later. It's so critical that we use these tools in a way that basically imbues trust, and we go back to our roots around decentralization in the first place. And so whenever you build a closed box or a black box, and you surveil it and you put people's money in, you have all kinds of potential issues with incentive misalignment. And that's exactly what happened at FTX, on top of the fact that they had almost no governance, no risk officers. They had one guy in control of this whole thing, and there was no real transparency in how the rest of the flow of funds worked or anything. And so, in any business or any industry, the most important thing you can do is just take care of your customers, and have a long-term perspective about partnership with your customers, so that you're creating mutual benefit. And anytime anyone in crypto has had a short-term perspective on how to take care of their clients, it's been catastrophic.
And when you touch on trust, I immediately think of the fear of getting scammed. And most people that are just entering crypto and Web3 are so concerned about. I remember, like, back then, like, the first crypto my family purchased was on Blockchain.com, I believe, at least one of the two that existed at the time or were more predominant. And I remember the security at the time, just in general, in the space wasn't as strong as it is today. Today, like, you can easily lock yourself out and not even be able to get back in.
You have the other side of the problem now.
Yes, exactly. So how do you see, like, the security, how it has evolved, and how do you see it, like, taking the next step? Maybe combining with other technologies, or making it easier for, the standard person?
Yeah, it's a great question. So really, security and functionality sort of live on this sort of spectrum of utility and ease, convenience, and then security. And so you can have maybe a wallet that's very easy to use for day-to-day transacting, but you may not store, your net worth in a system like that, or you'd want to have extra precautions for accessing larger values of money. And so what's cool now is that you can build software features that basically address all of that. You can have instructions so that you can only move less than 100 pounds worth with just a fingerprint, or you can have much more sophisticated systems that require many participants to agree before you unlock treasury or wealth. And so we've been across the industry building, I think, much more resilient systems that really sit across that whole spectrum of product offerings. If you're going to store as an institution, let's say you're a university endowment and you want to hold some crypto, you're going to want to have a very, very secure system. You're not using it every day to make payments. You're taking a longer term view on potentially the asset class, and there are tools to do that. If you're a regular user and you live in Argentina and you just want to make payments with your friends and settle debts, you can have a basic wallet, and you don't have to have as much, I'd say, transactional security to support something like that. So we've come a long way, and you're right. In the early days, it was sort of intimidating and scary for people, but the tools now have become far more user friendly. They look a lot more like any traditional financial services firm's account or wallet service. And so I think the industry has made some huge progress on that.
What's some behavioral trends that you're seeing?
Yeah, good question. So I think 2024, there are sort of maybe four big themes that I am seeing happen. So number one, it's impossible not to talk about the meaningful market structure change by having the ETFs approved in the United States. So exchange traded funds are a product that can be sold basically into the brokerage services of the largest wealth owners in America. So basically, this means that BlackRock and Fidelity and others can sell what now just a Bitcoin ETF, and we think in the future potentially others, to all of the retired Americans and older generations who previously may not have thought of ever acquiring Bitcoin just because it would have been too intimidating for them to go explore doing this through a custodial account service or something like that. Now they can do it through their existing financial service advisors. And it's, for those of us in crypto, that may seem a little counterintuitive, but for them, it makes a lot of sense. They have trusted relationships with people that have been helping them manage their money for their whole careers. And to me, it's a huge deal. Like, crypto became a $3 trillion asset class because a whole bunch of young people around the world basically forged it. And now they're going to be selling this stuff to a much wider market, and that's a big deal. And so that's why the amount of money that's moving into these ETFs is unprecedented. The BlackRock ETF is the most successful ETF launch in the entire history of the largest asset manager in the world. That's a really important little statistic. So big theme there is the market access improving, especially through the institutional adoption of Bitcoin ETFs in the United States. You're seeing a real interesting trend right now, from my perspective, on what I would broadly describe as Bitcoin DeFi. So decentralized finance has sort of spawned out of the Ethereum network and into a bunch of others, Cosmos and Solana and many more. But a lot of the work is now coming back to Bitcoin. And I think it's interesting because Bitcoin has the most scaled the largest, most secure, longest running blockchain in this technology's history. And so to take all of the exciting sort of emergent use cases and bringing them back and settling them on chain on Bitcoin, I think is particularly interesting. And so don't count Bitcoin's innovation out in this cycle at all. You have another big key trend, which is the convergence between the vanguard of the AI development and crypto. And so it's important to remember that crypto again came to exist as an experiment to basically build an alternative financial system. So it imbues decentralization, transparency, open source, and these are the really important fights that we should be having in AI as well. And finally, I think the real development community out of AI gets this because they're deeply concerned about what happens when you pile a whole bunch of precious information, build models on that, and then control it, and don't let the transparency that's necessary for these things to be developed responsibly to happen. And so there's an alliance forging finally between these two really big movements, and I think it's going to be beneficial to both. And beyond all that, you've got a really exciting event in Bitcoin land, which is sometime in the next 2 weeks. The supply of the most valuable and longest running crypto will reduce by 50%. And so for those that aren't familiar, Bitcoin sort of mimics the rare earth properties of a physical good like gold by having a fixed and limited supply. And the amount of it that comes into circulation reduces over time. We call this event the halvening, and every 4 years we get to talk about it, just like a rare eclipse. We get to talk about this very important change in the fundamental supply of the world's most valuable hard digital currency. And so that's happening very soon, and that has usually coincided with one of those 4-year cycles that I was describing earlier.
Mm-hmm. Bitcoin is definitely having a moment, and it's really exciting to see. There's so many L2s popping up at the moment, and there is a lot of discussion around will this be the norm, or is this like a temporary thing that we are going through? What are your thoughts on this?
So I think this is going to be interesting because there's, like you mentioned, many L2s that are being developed. So for our audience, L2s are basically an abstraction off of the base layer, meaning the core settlement of a crypto protocol. And it's intended to basically increase the transactional capacity of the network. This is very important because most of the use cases for crypto require a large amount of capacity to perform economic activity. So you can think of it a little bit like you build a layer one or like a highway system, but once enough people ride on those rails, you start to get congestion. And so if you build a higher capacity network on top of that, you can increase the total amount of transactions or the circulation of the transactions on the network. And so there's many different companies in protocol projects and research groups and foundations trying to develop these types of transactional networks. My view is that the competition will be healthy for the market, but there will not be a lot of winners here. There will be a few that really significantly support the development and improvement of several protocols, and I just don't think you're going to have 75 of them. And so we'll see what happens, but it's pretty clear that there'll be a few winners, and a lot of the others will not be successful.
Mm-hmm. And as we progress in the space, we're sort of like building the blocks that then people can build better on top of. And recently we had a few of those in the space, mostly in DeFi. Is there anything that you see that is sort of like a missing block that once it's there, it will allow for DeFi to go further?
It's a good question. I think we still take for granted how difficult it is to do the step before that, actually, which is a lot of people just hold pounds, dollars, euros, physical fiat currency, their national currencies. And they have a long relationship with those currencies. They was the first money they ever earned when they became, they sold lemonade or became a teacher's assistant or whatever. Everyone starts offering little bits of money. So, we still have to build really quick, easy to use conversion systems between, I would say, the traditional financial world and the future of finance, DeFi specifically. I'm not too concerned about all of the, super sophisticated, next generation things that DeFi is concentrating on, because from my perspective, if you want to get to 1 billion users, you actually need to move 900 million users from the existing world into that future. And I don't know the exact numbers. There's probably like 250 to 300 million crypto users globally in the world today, and those numbers are argued about. But let's just for the sake of argument say there's about that many. So to get to 1 billion, you still have a lot of work to do to basically convert from the old to the new. And so I think more effort should be made in making those rails easier to use and more adopted. And it's one of the reasons we're here at Paris Blockchain Week this week. So Blockchain.com has announced Blockchain.com Pay. It's a entire API wrapper for our brokerage service. So all the crypto startups around the world that just want an easy way to help their users acquire their first Bitcoin or Ethereum or whatever the crypto they want is, or a stable coin, can integrate this payment protocol and immediately basically tap into our whole payments network and support basically onboarding the next billion users. And so that's the kind of stuff I'm excited about, because I think other people can go build all the cool exotic things, but we still have to get that first experience right. And it's going to take it's going to take all the startups in the world building those things, but you have to get that payments infrastructure in place.
Is it live already?
It is live right now. Yeah, and we'll be announcing a very major partnership with MetaMask this afternoon, and you should come to our party.
Oh, it sounds amazing. What else exciting are you working on at blockchain.com?
So blockchain.com has sort of two sides of our business. So we do continue to support one of the most widely used and popular wallets in the world. So you can download it for free on iOS, Android, and web. And you can buy your first crypto. You can trade or swap. You can use DeFi. And so it's really designed as like an early entry point or passport into the future of finance. And we're really proud of that product and continue to develop all kinds of new features for it, including staking and much more. So long roadmap for that. And we're continue to recommend that as sort of a great place for retail users and first-time crypto curious community members to basically get their feet wet. We also have an institutional offering, so this is a much more sophisticated part of our business where we work with venture funds, high net worth individuals, traditional financial services firms, payment networks, crypto protocol projects, and more. We do everything from over-the-counter trading. We have an exchange. We do market making. We help with listings, and that business is doing very well. So Blockchain.com is having its best quarter in years right now. The market is very healthy. And I think it's important to acknowledge that the distance we've come in the last decade is something to be proud of. And I was just at an event here in Paris where all these people are still asking questions about what happened a few years ago and can the industry recover? And I'm like, the industry hasn't just recovered; it's thriving and it's established itself. We used to say it's not a matter of if this happens, or it's just a matter of when. When already happened. Crypto is here to stay, and now it's about building the next sort of experiences and really delivering on the promise of what crypto was designed to do, which is build better experiences for people to control precious information so they can do whatever they want over the internet, make payments, manage their wealth, and do it in a much more personalized and frictionless filled way so that they have more control over their money.
That's amazing.
Great.
For everyone watching, how can they keep up with you?
Yeah, for anyone who wants to follow us, we're on Twitter at blockchain.com. I'm at Nic Cary, and you can definitely follow us on our, we've got blogs, we've got, this is blockchain.com, and we also have a podcast, and maybe one day we'll have some reciprocity, and you can come tell us what it's like being a crypto journalist.
Nic, thank you so much.
Thank you.